Hello and welcome to the Daily Market Commentary with me, Jan Muta, Chief Market Analyst for TIOmarkets. And please do remember that we do not provide investment advice. So all the views expressed in this presentation are our opinions only and are made available purely for educational and marketing purposes, and they do not constitute investment advice. And they do not constitute in any way an invitation to acquire any financial instrument or product. So proceed with this presentation only if you agree with the presentation. Now, yesterday we had ECB leaving the rates in Europe unchanged at 0%, and they kept the 20 billion net purchases as a purchases program untouched. And they also commented they are not really targeting Euro-USD rate, but will monitor it. This is in slight contradiction to what we saw earlier or heard earlier from one of their officials, Lane, saying that when the Euro-USD rate keeps on going higher, it starts to feeding in their models sooner or later. So there's a slight contradiction there, but let's see how it goes, what the central bank does in the future. The US crude oil inventories came in at much worse levels, demand-wise, than was expected. We had the official number confirmed at plus 2 million barrels, while the inventories had been expected to decrease by 3.1 million barrels. So these obviously brought the crude oil down, and our resistance that we said yesterday that it's a key level, it held, and the market now looks quite weak. The next big meeting, the next big news is going to be the OPEC meeting on the 17th next week, which is Thursday. The US stocks were down yesterday as Democrats stopped a bill that would have brought 300 billion in more in new coronavirus aid. But before we go and see how the VIX and how the stock futures are trading, let's take a look at the currencies. Okay, Euro-USD rallied yesterday after the ECB announcement, but then came down again. This uncertainty is a little worrying for the bulls, and so it makes us to question whether this move will continue. But as long as the market stays above the key level that we have so often before pointed to, so many times we pointed to the 1754 key support here, saying that as long as the market stays above this, the uptrend is intact. And even if we get quick moves below and then price bounces quickly higher again, we still have reasons to believe that the bulls are determined to take this market higher. Obviously, if we don't see market breaking and closing above resistances, that starts to become a worry. But at the moment, we are still within the channel. We are still above the 1754 key level. So let's see how it goes. I say this so often, but that's the way it goes with the markets. Most of the time, you don't know where the market is going to. Any market. If you knew, I don't think you would be watching this video or really doing anything else but trading. But because we all have to live with this uncertainty, we have to learn, we have to take in information and then compile that information into some sort of coherent picture that helps us to, from time to time, find the right moments where the probabilities are on our side, and we can say with some level of certainty that this is more likely to happen than something else. So I'm looking at this market and I'm seeing that there's still momentum behind us. Market is moving sideways. It has been making higher lows, but at the same time it is struggling a bit. So what I would love to see now from the bulls point of view is that we get a higher low and then market moves higher. If we take a look at the 4-hour chart, market moved yesterday above this pivotal point here, but couldn't hold the levels and was sold off. So now it is imperative that we get a higher low above 1754 to maintain the bullish momentum. Let's go and see the other important currency pairs. Yesterday I focused on this candle, the daily candle here, which showed signs of potential momentum reversal, and I was saying that this is exactly that, potential momentum reversal. And I told you in the video that if we see some follow-through buying, the market was at somewhere here at the time. Let me see. Yes, inside this candle. So I was basically saying that we need to see some follow-through buying, and that basically would mean that we get a higher low above this low here, suggesting that yes, the bulls are taking charge and likely to push prices higher. That never happened. The political situation in UK is so difficult at the moment between the EU and UK that the pound just dropped lower through this potential support there, and is now trading below it. So it makes sense to ask, do we have upside momentum here? No, definitely not. Is market at any important levels? Let's go and see in the higher time frame. But judging from the 4-hour, we have this market in a downtrend, and therefore it is more likely that we will see lower prices than the market moving higher here. So obviously anything can happen in the markets, and sometimes happen, but everything is, to put this differently, we have to try to figure out what's probable, what is likely to happen, because we don't know the future. We just have to go with the probable opportunities and then use a proper risk management as we go along. Let's go to the daily chart and see what this market looks like. I'm going to take these off for now. Yes, market has broken below this rising trend line. It is still sort of close to this previous high here, but at the same time, there's another, like we saw in the 4-hour chart, there's another lower high which was actually created pretty much at the previous support, now acting as a resistance. So if we get a rally in pound, unless the political situation somehow surprisingly turns around, I think it's going to be difficult to see pound pushing through these levels. So it's more likely that the rallies will be sold in the future. So let's see where the levels might be after this. Obviously, the sort of if we focus on the nearest potential levels, we have these highs that used to be a resistance, now potentially acting as support. And if we see where the important Fibonacci levels are, we see that, okay, we are now sitting at 50%. This is there. So, and the next one is 61.8 coming down here, roughly, roughly coinciding with the previous resistance there. So let's follow daily and 4-hour and hourly charts to see if the downtrend continues, if it's likely that we get down to these levels. At the moment, I think there might be some bounces higher, but with the political situation being what it is, it's quite likely that the previous consolidation areas act as resistances. And USD CAD has been a market that's been very kind to us lately. When the market was trading up here, I was telling a couple of days ago to my audience that I believe the market is likely to sell off and come down to roughly these highs. And then I believe there will be buying, and the buyers will come in at this area and try to take the market higher, possibly as high as this, but that remains to be seen. At the moment, this is where we are. The market came down exactly as we expected, and it bounced higher again exactly as we expected. So very nice moves there. And if we now get a higher low today, then there's very good likelihood that the USD CAD will push over to at least to these highs, which would be the short-term target here at around 32.40 area. Now there's another market that is very highly correlated with this and or negatively correlated, and that is crude oil. So let's see what's happening with crude. In yesterday's analysis, I was saying that it's very likely that the 38.50 is going to be a significant level, and exactly that's what happened. The prices rallied a bit and created a higher low yesterday as a result of this increase in US crude oil inventories. And now we have something interesting developing here, something that very much looks like a flag formation. It's typically a continuation formation, which means that the previous momentum, the prevailing momentum, is likely to continue. Again, it's only likely, we don't know what's going to happen, but market is moving lower, and we have fundamental backdrop that is quite negative. We have lots of supply of oil. Oil and diesel both are at the moment stored in tankers, and basically there's not enough space soon for all the stuff around there. So the market is likely to head lower than more likely to head lower than higher. So let's see where this market might go to, and I've used this arrow here. Basically, the idea with flag formations is that you take the previous move, which is the sort of flag pole, so to speak, and then you make a prediction based on where the market is probably to break out from the formation, and that gives you an idea where the market might move to. So this would be sort of the halfway of the move. We have a support at 34.36, and then we have the next support all the way down here at 30.63, which coincides with the 38.2 Fibonacci level. So I'm thinking, yes, it's likely that the market will go lower, and if it breaks below this formation, then the sort of 33.10 I think is a good target here for the prices. If you want to see more on oil and my commentary, go to TIOmarkets.com/analysis, and you have all my analysis articles there for you. Now, also, I want to mention that with TIOmarkets you can have excellent packages. You can just pay one monthly fee and trade as much as you like. So you know exactly beforehand how much you will have trading costs. You know your strategy. You know the number of trades that you generate over a month, for instance. So now you know exactly how much you can or how much the cost will be, because sometimes, you know, whatever the strategy is, the number of trades might change over the month. So that is a variable X. But with TIOmarkets, you can have a VIP account, VIP Black account, and just trade for one fee for the full month. Let's see what's happening with the 4 hour. Here you can see the flag formation quite clearly. It's a triangle, and at the moment the market is trading below these sort of sideways moves here, and the market has been making lower highs. So in a downtrend, it isn't a surprise if the supports break. Then let me take you to see some currencies. I have USD Swiss here, and then a couple of euro pairs. 2 days ago, I was saying that this is another market that is trading at resistance and could be coming lower. And this is exactly how the market has behaved since yesterday. I was saying when we're trading, we're somewhere around here. I was saying that this market is likely to move lower, but because it's kind of consolidating, moving sideways here, there's a chance that when it approaches these lows, there will be buyers, and this is what happened. Now we have a bit of a bullish candle here from this base. Let's see if this continues. If there is move higher, that is going to be negative for Euro USD, because there's a high negative correlation between these two currency pairs. But at the moment, it's kind of difficult to say what is going to happen. It's Friday, so sometimes you have a lot of volatility on Fridays, but there's always the weekend risk ahead. So I wouldn't advise to take that risk. It's better to close the positions and then see where the market opens on Monday, especially if it's a highly geared position. If it's not geared, then obviously the situation is different. But yeah, this is where we are at the moment with this market. It's still in a downtrend, but there's some consolidation going on, plus an attempt to take it higher from here. So this yesterday's high is going to be a key level. So if we get a move above it and then continuous buying, then it's more likely that we will break the channel and go into that area of couple of resistances there and the moving average. But we're not there yet. The market is trading inside this candle and could be still going lower, especially if the Euro USD moves higher. So another one of those situations where we just have to wait and see. And when there's a good trading opportunity, that's when we're going to take it. Euro New Zealand looks kind of interesting here at the moment, and that's because it has retraced about 60% of the move that it made earlier. This move here from July to August, it has moved against this move by about 60%. It came to these levels where the buyers stepped in and then created a sort of bullish weekly candle here. So that's interesting. So let's go into the daily chart and see what else this market can tell us. And here we go. So it's in the middle of the range. So there's always a bigger risk of market moving a little bit. It's always more difficult to make predictions and analysis when the market is in the middle of the move. But I like the idea that it has retraced to a level that used to be significant. We had sideways battle there. There was another battle here, and the market came down to that same zone and bounced higher. So let's see what can we understand here. The market is struggling to move higher a little bit, basically because being a euro pair, it is obviously correlated with Euro USD. And yesterday's flurry of activity when the market moved higher and then came down again is dampening the move a little bit here, or the mood, I should say. Now, if we go to 4-hour chart, and if I just try to expand this a little bit so that if you are viewing this in using a mobile device, it'll be a little easier for you. So there's a bit of an exhaustion candle there at 1700 hours, which is about 1 p.m. GMT. And so that was an indication that the price might come lower, but it has already done that, and it is creating, at the moment, it is creating higher lows here. So there is a bit of chance, I think, that we might see this market moving higher and attracting buyers above this low. We don't know, obviously, yet where is that going to happen, but it is currently bouncing higher from the 50% Fibonacci level there, which also coincides with the area of some minor moves up and down here before the market was able to move higher. So this level acted as a resistance before, and now obviously is providing a bounce to Euro New Zealand. So this market currently bouncing higher, and if this move continues, then there might be a sort of at least intraday trade, because it's Friday today and weekend coming up. I wouldn't take the weekend risk, I never do. But it's obviously, I'm not giving investment advice, I'm just telling you my observations, and you then take all these things into consideration and make your own decisions based on your own experience and your own risk tolerance. It's important to underline that we are adults here and we take responsibility of our decisions when it comes to markets and trading. So let's go further. I have Euro Aussie, which we touched upon yesterday. Briefly want to cover that as well. The higher lows here indicated that the Euro Aussie might be actually moving higher, and I was suggesting we might see a move all the way up there, but this hasn't happened yet. Obviously, the reason for this is the weakness in Euro that came after the ECB press conference. The market first rallied, but then came down, and this market has retraced some of this rally also. So when you get a lower high, that's never a good news, but we could still say that it's part of the consolidation here, and there's a good chance that the market will attract buyers again above this low. So that's going to be the key level now. If we get the buyers coming in above this level and market starts to create higher lows in even smaller time frames like an hourly and even smaller than that, then that's obviously good news. Don't go to too small time frames, because then there's so much noise that it's difficult to see what's important and what's not. So that's why I usually come top down using the weekly, daily and 4-hour charts. Now, the next market, we're going to move away from currencies into stocks, and that's what we're going to use to finish off this this presentation. Let me come back to you in a moment. Let me just find my stock charts just a moment. VIX rallied a bit yesterday, like you can see here. It moved higher, which meant that the US stocks moved down. But this move was stopped by this sort of market top here. And at the moment we are trading, although at the sort of much lower levels. So let's focus on this as the US market opens and see how the market open is traded here and in futures. And because I want to save some time and keep this video shorter, I am going to cover the US futures with the performance chart. We have DAX here on orange, then we have Dow on black, we have S&P 500 E-mini futures on blue, and then green we have Nasdaq. So as you can see, DAX has been the strongest. It has shown some relative strength here, and while the US indices have been making lower highs, even if we all of these, you can see we have a lower high, lower high, lower high, and the same goes with S&P, and the same goes with Nasdaq. So there is some attempt with Nasdaq to create a higher low, so it remains to be seen what happens now when the market opens today. Is there going to be enough buying power, enough willingness to take the market above these highs, which would confirm that yes, there is a trend change happening in this 4-hour chart. So as usually, I would like to say, whenever you trade, be careful, manage the risk, and I very much would like to see you in my webinars. So when the next webinar comes up, I'll let you know, and I expect to see you all there. If you like what I do, give me a thumbs up in YouTube now, and go and copy that video link and give it to your friends so that they can come and view these videos also, because I know that over time you will learn, they will learn, and they will be thankful to you for the fact that you have invited them to TIOmarkets to see what good teaching and analysis there is available for all of the active traders out there. And today, just before we finish, we have Europe Group meeting going on today, but for traders, it's going to be more interesting to see how the market reacts to US inflation numbers later on today. So keep an eye on USD pairs, especially Euro USD. This is the last important risk event this week. Thank you for your time. I look forward to seeing you next week, and I hope that you will have a lovely weekend, and always remember to trade safe.